And time now for an in-depth look at the market news this afternoon. For that, I'm joined on the line by Dr. Kim Sei-wan, professor of economics at Ewha Womans University. Professor Kim, good afternoon. Thanks for coming on today.
Good afternoon, Devin.
Well, let's start with the Finance Ministry's Green Book report for July. It says volatility continues in the financial markets because of inflation, rising interest rates, and a slowdown in China. Downside risks are expanding. The first mention of an economic slowdown for Korea came in last month's Green Book, and it's the same this month. So, Professor, what do you make of the latest report?
In recently released Green Book, which is the official report of the Korean government on Korean economic status, government warns further decline of the economy for this year as external factors are not improving along with high rising inflation. Also, export growth could lose steam amid deteriorating external economic conditions. Market volatility and global economic downside risk further increased from the Federal Reserve fast rate hikes, China's economic slowdown, and protracted war between Russia and Ukraine. But a positive side of the economy is that domestic demand has been on a mild recovery track on improvement in the job market and a rebound in person services. In June, Korean government lowered this 2022 economic growth outlook to 2.6% from its earlier forecast of 3.1%. It also sharply raised this year's inflation outlook to a 14-year high of 4.7% from 2.2%.
Well, to look at the equity markets amid all this volatility, Wall Street overnight saw a big rebound on earnings. Banks doing well. The Dow is up almost 2.5%, the S&P more than 2.7%, and the Nasdaq 3%. What's the story in the global equity markets? U.S.
stock indexes recorded their biggest one-day gains in nearly a month Tuesday as investors reacted positively to a fresh batch of company earnings report, particularly in commercial banks. The S&P 500 added 2.8%. The tech-focused Nasdaq Composite gained 3.1%, and the Dow Jones Industrial Average rose 2.4%. Investors are parsing earnings report to determine how decades-high inflation is affecting corporate profits and consumer spending. Economists have been raising the estimated chances of a U.S. recession within the next 12 months, worried that the higher interest rate put in place by the Federal Reserve to curb inflation will weigh on economic growth. All Asian markets moved higher today along with yesterday's United States market. Nikkei 225 gained 2.7%, and Shanghai Index and Hong Kong's Hang Seng Index both advanced by 0.8% and 1.4% as of 3 p.m. in Seoul time.
Well, Asian markets up, including Korea, is in line with these gains in the other markets. Stronger than expected earnings from Netflix in the U.S., or subscriber numbers, rather, pushing up stocks related to Korean content. Studio Dragon was up more than 5%. Tell us about the domestic market.
Today, domestic markets also advanced, supported by U.S. and other major markets' big rise yesterday. Domestic investors do not find a significant direction of market under declining markets from the end of last year. So U.S. markets' big rise yesterday became a trigger to raise domestic equity demand today. The benchmark Kospi gained 0.7%, and Kosdaq also advanced 1.1% today. In Kospi market, individual investors net bought 65 billion won, which was a major driving force among the investor group's movements. Most of the large cap stocks gained today as the whole market expands. The second largest size, LG Energy Solution, rose 0.3%, and SK Hynix also gained 2%, and so on. But the largest sized capital, Samsung Electronics, retreated 0.7%, and Kia Motors also lost 0.6% today.
Well, all eyes are on the exchange rate, Professor. It's been holding above 1,300 won to the dollar, about the highest level since 2009. Korea's National Pension Service is hedging the currency aggressively, reports say. Korea has one of the biggest state pension funds in the world and the biggest investor in Korea. What does all this currency volatility mean for the national pension?
As $1 exchange rate goes up, import price goes up quickly. So recently, weakening Korean won against the U.S. dollar became additional strong power to raise domestic price level. Government tried to actually stabilize exchange rate for months through currency market intervention, but it did not work. And then government recognized that national pensions, massive foreign equity purchases are one important factor that raised $1 exchange rate. In national pensions portfolio over 900 trillion won, foreign equities cover about 30% of total portfolio, or 270 trillion won. But national pension says in the next 5 years, they will buy more foreign equities up to 50% of total portfolio. Yesterday, Department of Finance recommended that national pension would use foreign exchange hedge, which lessens national pensions dollar buy to purchase foreign equity. I think national pension will accept government guidance on foreign asset purchases very soon. Then it would be a partial help to stabilize the exchange rate.
A lot of demand on that pension coming in the next few decades, Professor. We'll have to keep an eye on that. Thank you, as always, for coming on the program, Professor. We really appreciate it.
Thank you very much.